Utopias, dystopias, and today's technology hosted by Johannes, bringing a global conversation discussing technologies that affect us all.
Hello, I am Johannes. Welcome to the show. Today I am here with Varun Mehta, and we will be speaking about topics related to FinTech, the stack that is involved in FinTech applications, as well as the special case of India, why India is such an exciting market for FinTech applications. Varun prefers to introduce himself, so let me ask you, can you tell us a little bit about yourself to start out the conversation? Varun,
Sure,
welcome,
Johannes.
Varun. Welcome.
Just to start off, thank you so much for having me on the podcast. I really appreciate you inviting me like this. It's FinTech in India is a subject that I'm really excited to talk about because I think it's one of the most fertile places in the world for entrepreneurship, and there's a huge amount of potential for growth over here. But just to give the viewers a little bit of a sense of who I am and where I'm coming from. I'll start with my education. I studied my economics at Warwick and then did my master's in economics from Imperial. And after that, I had the privilege of working for Accenture as part of their financial services innovation team, primarily focused on blockchain technologies. And this was based out of London. And I had the privilege of working with some really fantastic people and some really great clients. And about 6 months or so ago, I decided to move on from that because I wanted to pursue entrepreneurship. And I moved back home to Mumbai, and I'm attempting to start a new business called Paisa Smart. And what we're trying to do is we're trying to build a 360-degree personal finance manager for our clients. Now, I just want to sort of very briefly touch upon why I like India so much and where, I feel, there's a huge potential for growth here. So just from a macroeconomic perspective, I think it's pretty clear that where the world stands right now, there's not a lot of growth. You have aging populations in every major advanced economy, and you have entrenched financial services giants with a high degree of financial penetration in most advanced economies in the world. And the only place in the world that's still generating substantial and meaningful growth is India. So in FY23, India's growth rate was 7%, and FY24, it'll continue to be about 6.5%, which comfortably beats most economies. And the other side of this is that India is an extremely young population, which is a demographic dividend that people talk about a lot. Our average age is still 27 years old. And so there's a huge amount of growth left to come. There's a lot of people left to join the workforce, build savings, build, financial knowledge and wealth. And that's the market that I want to play in, and that's the demand side of things. But from a personal perspective, I've had the privilege of doing a lot of research, and a little story from a personal perspective. When I did my undergraduate at Warwick, I wrote a dissertation around inequality in the US, and I won't go into the details of that, but I found that the mis-selling of financial products and bad financial advice is one of the main reasons that a lot of US households and families fell into poverty, particularly after the 2008 crisis. And my endeavor here is very much to try and build something that mitigates that problem for the Indian consumer.
So what does that look like? So you want to build essentially a resilience against such things as financial crises. If I understand it correctly. Yeah. So what kind of apps can you build in the private business that does that?
So it's not necessarily about resilience from financial crises. It's more about smart, stable, well-advised financial management for households and individuals. So, for example, in 2008, you had a lot of people in the US that were over-leveraged. They had taken huge housing loans. They didn't have any assets. And a large part of that was, teaser rate mortgages and really complex financial products that people didn't really understand at all. And that was driven by financial services companies wanting to hit their targets and meet margins and selling any and all types of financial products to their customers. And I kind of want to stop that from happening because I think that there's a dire need for good financial advice at an individual and household level. I don't think anyone can predict or stop financial crises. Every upswing leads to euphoria and over leverage, and then a bubble gets created, which eventually bursts. And I think that's to some degree unavoidable. That's just the nature of economic cycles. But I do believe that good financial advice and smart financial management can help insulate people from these crises. And I think in India also we have some very fantastic and proactive regulators that are very concerned about the financial well-being and health of individual citizens and households, not just the overall financial ecosystem. And that's why I feel very happy and privileged to be building in this ecosystem.
Oh, that sounds fantastic. Yeah, I think we're missing a lot of that in the United States, the regulators. And, it's self-regulation. In the US, it's self-regulation, right? They handing...
Exactly. And... yeah.
So this is not the case in India.
Yeah.
Could you speak a little bit more to the regulation, actually, that is
Sure.
happening in India?
Sure. So I think regulation in India it operates with a completely different perspective, right? So Western regulators, they have a market-first perspective. Their primary remit is to protect the market, is to protect the industry, and protect the economy. Indian regulators have a much more consumer first perspective. So even if the market and the industry and companies suffer, as long as consumers are protected, that's okay. And that's the trade-off that they're making, that it has its benefits, it has its risks. And the other thing is Indian regulators are very much more risk averse than American regulators. So for example, securitized products which are pretty widely proliferated across the US and the UK and most of Europe, they're very rare in India. And that's because of the degree of regulation required to produce a securitized product. Derivatives on securitized products, which are very common in the US and in the Western financial ecosystem, are practically non-existent in the Indian ecosystem. Even derivatives markets on fixed income products, which is one of the largest markets in the world in the US and Europe, are non-existent in India. And that's primarily because of regulation that intends on stopping the use of these products. The other side of the regulation...
Just really quickly, for people who are not aware of what derivative markets are, could you just give a really brief explanation so that...
Sure. So derivative markets are basically... products built on top of other products. So when I say products, I mean financial products. So let's take the 2008 crisis instrument, which is mortgage-backed securities, as an example. Now, in the US, if you borrow, to buy a house, you can do that. But the bank that you're borrowing from will take that loan, package it up with 1,000 other loans, and sell that consolidated package to somebody else. Now, in India, that doesn't really happen. Purely because of regulation. And a derivative is, let's say I've bought this package of 1,000 loans. I can create some structured products where, let's say, you're an investment bank and I'm holding this package of 1,000 loans. I can say, okay, I'll give you whatever interest I earn on these 1,000 loans, and you give me some fixed number back. And this can get exceptionally complex, so we can make this highly conditional and conditional on external events, and that's broadly what derivatives are. And they serve some purpose because it allows you to eliminate certain risks, for example, interest rate risk or inflation risk. But in another perspective, or at least the perspective the Indian regulators take, is that leads to too much leverage. And
I have a quick question about this as well, because it's maybe easier to regulate for the consumer in a place that has 7% growth, right? Than in a place that has 2 or 3% growth, simply because you try to, our regulators, I think in the US, what they're trying to do is they're trying to squeeze every little bit of growth out of the economy that they can, because they just don't have a lot of it, right? So if you have 7% growth, so if you regulate and it'll decrease the growth rate by, say, 0.5%, no one will complain, right? So it went from 7 to 6.5% growth. It's still huge. It's still, in the long run, this will actually translate in a lot of boats being lifted. And so you have this, I think that in the US too, we had much more consumer-oriented regulation when our growth rate was high during it started to come in during that time, right? So when in the 50s and 60s, when there was a lot of growth, there were all of these consumer protection agencies at work, and there was a lot of regulation in a sort of consumer protection area. Do you think it has something to do with that? And do you think that because, there is this nature in economics that at some point there is this convergence to a particular long run growth rate, which is something around 2.53% or something like this? Do you think that will happen in India? I mean, I think it's inevitable, right? To some degree, or maybe not with AI, who knows? But do you think that will happen in India? Do you think when it happens in India, the regulations that protect consumers will also start lifting, and they're going to start going for the 100% growth oriented policies?
So, I mean, it's a very interesting point that you bring up, and I hadn't really thought about it from that perspective, but I'm not sure I agree with that, and I'll try and disambiguate that in a couple of different ways. So, this idea of the long run growth rate, which I think we're both quite familiar with, I'm not sure that holds valid. That's really valid for the next century, because that long-term growth rate was driven by productivity increases in innovation. And I mean, let's talk about the podcast we're doing here in technological innovation. So I'm not sure I necessarily believe that there is a steady, stable long-term growth rate. I think that's everything about, the kind of innovation we're able to generate. That aside, I think you're right about the fact that, US regulators are aimed at squeezing every last bit of growth out of the economy. But I don't think that's driven by the fact by it's a 2-3% growth economy or a 6-7% growth economy. And really, maybe this is the Indian regulator side, because they've behaved this way even when India was at a much lower and much worse growth rate. So this is just a perspective that they have, and that's exclusively driven by regulation and recruitment. So in the US, you have this sort of revolving door policy where you can be a regulator, then you can work in private industry, then you can be a regulator again. But India doesn't do that. If you join the government and you work for the government, that's it. You're not allowed to work for the private sector, but you'll be protected and taken care of for the rest of your life. And so Indian regulators sort of take this perspective because that's what they're asked to do, and that's what they're taught. And that's the end of the story. Growth be damned. We're going to protect the consumers from every angle. We're going to protect financial stability from every angle, and that's just how they operate. And I wouldn't necessarily say that it leads to a lower growth rate. I don't necessarily think that's true, because I just think it leads to less extreme economic fluctuations. Because you can't achieve that 8-9% growth rate, but you're also not going to see an 08 type financial collapse. And they prefer to stay within a slightly narrower range where they may give up the highest outcomes, but they're also protecting against the worst outcomes. Whereas the US regulators seem to be making a different trade-off, and that's them, that's their perspective, that's that economy. But I like what we're doing, where we say, let's be safe first, because that's the regulator's job, at least in my perspective.
Yeah, I would prefer that too, honestly. And I think there are a lot of people in America who do as well. This is a very politically contentious area. And, we have, for example, the ex-Labor Secretary, Robert Reich, speaking on this topic, and he will be very much in favor of what they do in India and very much against what we're doing in America.
They say getting rid of regulations frees up businesses to be more profitable. Maybe.
Every unnecessary page in these stacks represents hidden tax and harmful burdens to American workers and to American businesses.
But regulations also protect you and me from being harmed, fleeced, shafted, injured, or sickened by corporate products and services.
It's just a very, I think it is a political issue in America, this particular thing.
Yeah. The challenge here is, I think there's this conversation that regulations and growth are intrinsically linked. which I also don't necessarily feel is entirely true. And again, I'll take the India example over here. Now, India is one of the most highly regulated markets in the world, particularly the financial services market. But it's still one of the fastest growing financial services markets in the world. And that's not just because of the high base growth rate, but it's also because of the high degree of investment that regulators make into the economy. And I'll give you some very, very pertinent examples here that we're all very familiar with, right? Aadhaar, which is Universal Digital Identity, UPI, Universal Payments Interface, DigiLocker, which is Universal Digital Documents Storage and Control, and most recently as well, Sahamati, which is data sharing consent and open banking for the Indian economy.
But that's horribly not secure and compromises privacy severely. And that's where the power of the account aggregator system steps in, because it now gives you, the individual, you, the small business, complete control, complete and absolute control of your data. So this is a very powerful moment for the Indian ecosystem, and you have numerous players, numerous financial institutions actually coming together, many of whom are live. In addition to FinView and OneMoney, you have CAMS and NADL, which are account aggregators that have got operational licenses, and you can actually download the apps of these AAs from your Play Store or Apple App Store. And not just them, but you have banks, NBFCs, and various registered investment advisors that are also live with their applications. And this ecosystem is growing as we speak. Every single day, hundreds of informed consents are being approved, and radically new financial services are being accessed by individuals and businesses in this country. And it's only going to grow from here.
And what that does is it takes care of some really fundamental financial services functions at scale with zero friction. So it reduces the moats of some existing financial services enterprises, but it encourages more competition and in that vein, more growth. And that's the power of India. That's the India stack. And that's why, in spite of higher regulation, we're able to grow more.
Very, very interesting. I think Americans should take note right now. This is something we can learn something from the Indian economy.
They absolutely should. They absolutely should. The India Stack is one of the most unique and powerful pieces of technology in the world. And a big shout out to Mr. Nandan Nilekani, who was an absolute visionary who built this stack. And I just want to take a second and expand on this a little bit more, just to sort of explain why it's so revolutionary. So let's take any financial services function, right? Like let's take Johannes. Let's talk about you. If you have to service your financial services needs, you need the ability to make payments, so your expenses. You need the ability to earn money, take or receive income. You need to be able to store that income in some productive assets, right? Now, in the US and the UK, you have legacy payment systems, which means, and entrenched interest, which is particularly Visa and MasterCard, which means that the cost of making payments across the entire economy is very high. But in India, you have UPI, where the cost of making bank-to-bank transactions or person-to-person transactions or person-to-business or business-to-person transactions is zero. It's by law zero.
Wow.
So
UPI.
Everybody, UPI.
What does it stand for?
Unified Payments Interface. And basically what that means is every single Indian, and sorry, I'll take a little bit of a side note here. One of the other related innovations is this thing called the Jan Dhan bank account, where every Indian by law has a mandated bank account. And there was a huge drive to open bank accounts for everyone. And I think they've hit about 800 million or so bank accounts for 1.4 billion population, which is really, really creditable. And so now everybody has a bank account and everybody has a universal payment instrument to make payments from one person to another person or one business to another business at zero cost. So you've taken care of that entire economic primitive, so to speak. Now, the next layer of this is if I've received some money, I need to store it securely. And what any bank will tell you, what any financial services entity will tell you, is that the biggest cost behind customer acquisition is the cost of customer onboarding in KYC. It's an extremely cumbersome, extremely difficult process, particularly after 2001, because of 9/11 and the implementation of KYC and anti-money laundering regulations. The cost of KYCing a customer in the US or the UK is extremely high because there's no central digital database. You have to take physical documents and verify them. You have to cross-check them. You have to pay verification agencies. You have to manually submit documents or even digitally submit documents. You have to do in-person verifications. It's an entirely too cumbersome process. But against that, India has Aadhaar, which is a universal digital identity. And what that means is that in literally 30 seconds, I can open any type of financial savings account. So I can open up a bank account to store my money in 30 seconds on a phone.
1.15 billion, that's how many people the Indian government says are now enrolled in its biometric identification system, Aadhaar. Now, under the program, people can obtain government services through their fingerprints and eye scans, which match up with a unique 12-digit number that's assigned to them.
But critics note that while Aadhaar was always supposed to be voluntary, the government is trying to make it mandatory for certain services, creating an added barrier to people getting what they need. Most recently, the government moved to make Aadhaar compulsory to file taxes.
Now, concerns have been raised about Aadhaar's digital infrastructure after multiple instances of identities and personal data being leaked. Other technical errors in the system often prevent poor families from receiving welfare benefits. So, is Aadhaar doing more harm than good?
I found that this is a project, this is an idea that has been marketed, but when I see what is rolling out on the ground, I see that almost everything that they said would happen, it's the converse that's happening. So if they say it's voluntary, it's mandatory, it's actually mandatory. If they say it's about inclusion, I see a large number of people getting excluded. If it's about reaching services to people, I find people are actually getting cut off from services because this has become one more hurdle, and so on.
See, the problem with Aadhaar is that it might, the idea might have been interesting, but it's definitely lacked in terms of how it's been implemented.
For me, what evidence is the fact that across the country, there are 400 million Aadhaar card accounts which are connected to their bank accounts, and they're being able to make payments just by the touch of their fingerprint.
That's it. I can open up what in India is called a demat account, but I think in the West is called a stocks and shares account for capital market instruments in literally 30 seconds. It takes zero effort at all. And that's a huge innovation because you've taken this giant piece of friction out of the equation and made it entirely seamless for citizens. And I mean, those are the two real main innovations so far that have made it incredibly easy for financial penetration to take place. That being said, the financial penetration rate in India is still only 20%. So there's still a huge way to go. And I mean, a lot of that is driven by financial literacy and overall literacy. But the point, just coming back to my main point, because I feel like I've been going on for a while, is that this India stack is an incredibly powerful tool for entrepreneurs to build on top of and deliver services to consumers.
But is there a dark side to this? So Europeans or Americans might wonder, if you have a universal identifier of yourself, you can be tracked, right, by the government. Is that true? Can they use this also to track you and to know where you are, what kind of financial transactions you have, done? Is it traceable by other players?
It is. So this is a really interesting point that you bring up. And it sort of brings me to the third level of innovation on the India stack, and that's called Sahamati. And I'll get to that in a second. But you're right? You have a digital identity. You conduct all these digital transactions. You have all these digital documents. So now you're leaving a massive digital footprint, right? Now that becomes a problem. But this is where this was designed not by the government, but by Mr. Nandan Nilekani, who was originally a private entrepreneur and then started an NGO and worked with the government. And the beauty of this architecture is that it puts control for your data with the relevant individual. And it's managed by a system which is only really just coming up to scale called Sahamati. And what that does is it allows you to, Sahamati is a Hindi word, it means consent. And what it basically does is it allows users to control who can see and use their data and consent to where it's being used. So if I have all these UPI transactions, okay, my bank may or may not be able to see them, but I can leave a consent marker saying, okay, I want you now as a third-party financial services provider to consent to see my data. And I can withdraw that consent at any time, and I can set parameters for that consent. And I can revoke consent as well at any time.
So it's like a data wallet?
And that as well
is it kind of like a data wallet in a sense?
Exactly.
So it's similar to
a data wallet.
Solid. Tim Berners-Lee has proposed the whole internet to be reworked around his idea of Solid. So is Sahamati similar to Solid?
I don't know what Solid is, so I can't say that for an absolute fact, but if you could send me a link, I'd love to dig into it further. But I think a data wallet is a great way to describe Sahamati, because it is essentially an inventory of your data and who has access to what.
That is actually something that we've been talking about on this show quite a lot with different people. Possibility of building something like that for the World Wide Web as Web3. There's a lot of talk about that. So I'm really grateful to hear that some other place, non-Western place actually, has beat us to it. I think this is a great thing. India, okay, yeah. Fantastic.
And a really interesting fact, 9 million people in India now have access to their data wallet and are to some degree actively managing the consents around their data, which is at India's scale, not a lot, but at technology scale, an immense amount.
How fast is it growing?
30% month on month.
Oh yeah, this is going. This is huge. Oh, that's very, very big. So yeah, I mean, this is, the matter is where it's going, right? Not where it is at this very moment, but where it's going, and it's going there fast. So this is very interesting.
Yeah,
indeed. So when you build your apps, so you're building apps on top of this system, then, right? On top of Sahamati, you're building apps with that system sort of as a building block. Is that right? Because that's what, like in Solid, you would have to do that. You have to sort of build solid apps, so to speak. So is that a thing?
That's correct.
Okay, great.
That's correct. That's absolutely correct. And I mean, two additional pieces of information. The first is that there's a huge push, there's huge governmental push behind this ecosystem as well. The Prime Minister has set a target for 100 million Indians to be onboarded onto this Sahamati ecosystem by the G20 summit in, I think, September. So that's an ambitious target, and I think insiders think that's probably not a reality, but it at least tells you the direction in which the government's thinking. And the other really interesting thing about this ecosystem is that it's entirely API driven, and there's no single point of failure or single provider. So there are a variety of providers called account aggregators that provide what's essentially a digital data wallet service that you can switch between as well. Yeah. But they don't have any access to your data. Their whole job is to manage the consents around your data. So that's how the system is designed. And for someone that's building on the ecosystem, it's as simple as integrating an API. So it's a really powerful tool that I believe is going to change the face of financial services in India.
So you're building apps on top of that. And so could we get a little bit more into the details of what you're doing? What is it that you're providing on top of this incredible system?
I'm gonna try and be a little bit careful about what I say here, and if I'm opaque, it's unfortunately intentional. I just given where we are, I'm a little bit more comfortable playing my cards closer to the chest. But broadly, we want to give people access to their data capital and ownership of their data capital. It's one thing to be able to manage the consents that you have. It's another thing to know what data you have out there and make sense of it to take the right actions. And that can be really as simple as looking at your transaction history and realizing that you're spending far too much money on drinking. and you cut down on that, and all of a sudden you have a bunch more savings. It could be as simple as realizing that your stock portfolio is wildly imbalanced and it's entirely focused on one or two stocks, and you need to rebalance that. So what we're attempting to do is we're trying to give people ownership and control over their data, and we're going to try and layer advice on top of that, so that you have the right advice at the right time to take the right actions to protect your financial future.
So it's a financial advisory in a sense, maybe a bit like a recommendation engine would be. Is that kind of an accurate?
That's correct.
Okay, great.
That's correct. Yeah.
That is a really fantastic thing. So, and how do you monetize that?
Subscription based, right? If ultimately, if you wanna access advice and the advice is good, unfortunately, you just have to pay for it. That's just the reality. I will say this though. I'm not entirely sold on the subscription model. I think that there's a lot of people that need advice and can't really afford to pay for it. So we are exploring other ways to monetize this, and perhaps facilitating securities market transactions or financial transactions is one way of doing that. But again, that's not necessarily the easiest way to make money, because most securities market transactions and financial transactions, payments, for example, are already costless for consumers. So monetization is a giant challenge in the Indian fintech ecosystem.
What about if your advice is good, right? Then if your advice is good, then someone will either save or make money in the long run, right? If you put a tiny percentage of that, if you monetize it as a percentage of this, I always think that would be the right incentive for anything I like to do. If I pay someone, I would like them to take a percentage of what they are bringing in.
That's correct. And that's one of the advantages of a subscription-based model or performance fee-linked model, where your incentives are completely aligned with your customer. There's no misalignment of incentives where you want to do one thing to make money and the customer needs to do another thing, which is one of the big problems with the financial services ecosystem right now. For example, right now in India as well, we have a lot of brokers that's encouraging consumers to do trading using highly complex derivative products, so futures and options on equities, which is really, really bad for them. Not only because they're highly risky, but 95% of all consumers that do this lose money. Not even don't make enough money, they lose money. And still there's a lot of, push to do this. And I think that's just a system of broken incentives, because they're not able to make money any other way. So they incentivize people to do these really risky things that they can make margin on, and then they lose money. But again, we'll have to sort of see the best way to make this work. And I prefer a transparent and clear pricing model, because again, I think it's important to build trust, but that's still something we need to figure out, to tell you the truth.
So what is your client base? So how many people have signed on to your services at this moment? Or is it still in development? Or is it serving people actively?
It's still in development. It's in fact still very much we're just about finishing the design stages. So we're still several months away from even having a product to release. In part because we've only very recently come to know about the Sahamati ecosystem, and it's only very recently reached any meaningful scale. I think it's only reached meaningful scale in this year so far. So we're still building this product, but I'd like to aim it at the average Indian, someone that's not in the top, 1 to 5%, someone that's maybe making underneath 500,000 rupees a year, 500,000 to maybe 1500,000 rupees a year. Because I think that's the market that has some investable surplus and can use advice that you give them, but still is not served by existing players.
Yeah, I think that's also very good, because those are the people who need to come up in the world, right, and who need to make good decisions in order for crises to be kept in check. And so, yeah, that's a very good, it's a very good cause, and at the same time very profitable. I think this is actually a good example of how you can build something that can make profit and also be serving humans. So I think I actually commend you for coming up with something like that, because people always think that there must be this tension between making money and serving humanity. Right? I don't think that's necessarily true, and you're an example of how it may actually not be true. So I think that's really good.
Well, I think don't pat me on the back too early. I don't want to pat myself on the back too early. I think I've got to get this built out, and I've got to reach some reasonable scale, and then we can talk about whether I've been able to make a positive influence on India as a whole and humanity. But that's the aim. That's what I'd like to do, and I think ultimately we'll just have to see if it plays out that way. Whether a regulation or another set of players gets in the way. But touch wood, fingers crossed, I'm able to continue down this path and build something really useful and valuable.
Yeah, how long have you been at it? How long have you been building it? And when did you make the decision to start doing it?
So I made the decision to start something in India about 6 months ago, which is when I moved. And I've been focused on trying to build this for maybe about a month and a half, 2 months, 3 months at most. A month and a half, 2 months, thereabouts. So very early days. And still gotta continue gathering momentum until this is released.
Wow, this is brand new. Basically, it's good that you already know so much about what you're building at this stage. I mean, that already is, I would say, something. But then, are you planning on using any technology such as, say, generative AI to help you in this? Have you thought about using, for example, GPT-4, the API? Have you applied for access?
I'm actually going to decline to answer that question for the moment. Well, I'll say yes, and then I'll stop there because we have. I'll just take a side note. I think GPT-4 or GPT 3.5 rather, is a giant inflection point for AI. Up until last year, I didn't see very many real useful use cases that were able to generate transformative value. Obviously, that's changed, and I think over the next 3 years, we're going to see an incredible shift in how digital services are consumed and delivered. And my view on that is that the way we consume digital services right now is done. And if you go back, you started out with websites. That was the first starting point, and then it went to apps, and that's really where we've been for the last decade or so. And as far as I'm concerned, apps are done. I think that's the last app wave, and we're now going to see, especially, a complete shift to conversational interfaces for all digital services. And whoever is able to deliver those conversational interfaces in an intelligent and useful manner will end up being the winner in the next decade of the digital evolution. And there's a lot of evidence for this as well. I'll take 2-3 specific pieces of information that I see as being really important. The first is that you must have heard of M-Pesa. M-Pesa is one of the original fintech innovations that built a fantastic payment system in Africa.
Kenya has become a world leader in the mobile banking revolution, and it's all thanks to the system M-Pesa. It was launched by Vodafone's Safaricom, and in only a decade, M-Pesa has expanded its money transfer service to almost 30 million customers across 10 countries.
And one of their key innovations was the ability to send payments by text message and receive payments by text message, because it matched the needs of the local population in terms of their ability to consume information and the data environment that they were sort of sitting within. So that sort of suggests to me that people can consume financial services through conversational interfaces. The second thing that I want to point out is that WeChat is the dominant interface for the internet in China. So as much as the West continues to be app-centric, China has already moved to a chat-centric environment. They may not have the advances in AI just yet, or at least maybe we don't know about it, but their interface has already shifted. And the last piece of evidence I'd probably offer is that the most used app in India is WhatsApp. And India is in fact WhatsApp's main market. because even for people that don't have apps, everybody uses WhatsApp. Your corner shop guy, your fruit vendor, your vegetable vendor, he will sell to you on WhatsApp. So India runs on WhatsApp already. So conversational interfaces is the next decade of digital development as far as I'm concerned. And I don't think that's particularly revolutionary to say at this point. I don't think I'm early on this wave. I think there's a lot of people that are saying it, but it's still worth reiterating.
No, I agree. I've actually said this before. These large language models have made such a big wave, and I started working with Dialogflow, Google's old chatbot methodology, and I thought that would be already good enough to start doing something, in that direction. And I think people do want to speak to their machines in the language that they speak to other humans. They don't want to learn a specialized programming language or some, I have to click on things or something like this. I do agree that language is ultimately, the easiest interface, unless you start implanting things in your brain or have something directly from the brain, some brainwave communication.
Maybe that'll be the digital interface of the 30s and the 40s.
I see certainly a move in this direction where people are talking more and more about computer-brain interfaces, direct communication to the machines, without even the need of language. But maybe this will, the way that also these technologies reverberate around the planet is different, because maybe people in India are not as interested in that as people in, for example, the United States and the United Kingdom. There seems to be also these differences in interests in some areas. I'm not sure how popular, for example, the virtual reality is in India. And, could you say something? Is there some applications in FinTech or in the financial services that stand out, that could be, where the Metaverse plays a role? Or what is your opinion on that?
So I'll preface this by saying I'm not a Metaverse expert at all. I know very little about it. I don't particularly understand the technology it's built on, and I'm not up to date with its applications. But from a human perspective, I'm not sure we want a more intrusive digital interface. I've used a VR machine. I've used it extensively. I've used it to enter meetings. I've not enjoyed it. It's been a giant pain. It was a novelty for like a day or two, and then after that, it was just too cumbersome to use. And I'm not sure we want more digital interference in our lives. I think we want our services taken care of digitally so that they're more convenient. But I'm not sold on the idea of the metaverse to start with. And from a financial services perspective, I don't see where it would be applied. There may be some niche applications. For example, you could have advanced traders using VR headsets to filter through and visualize incredibly large amounts of complicated data. But even then, I don't necessarily even think that's required. I think they already have enough screens. They can surround themselves with screens, as they often do. Maybe that can be replaced with a VR goggle and a metaverse interface, but I don't see any wide application.
What about the blockchain? So the blockchain is much more a fintech kind of type of technology. Samahati, the blockchain, is this a different system? Is it compatible with it, or is it a completely different system? Is Samahati the one that actually replaces blockchain? How does it interface, if at all? And are you building anything, or are you thinking about building anything on the blockchain?
Yeah. So, I'll start with low-hanging fruit. Sahamati and blockchain are completely not related. They're not even in the same universe. There's no relationship between the two of them. Sahamati currently works on traditional data systems and traditional communication protocols, and by all accounts, it works reasonably well. There may be a use case to put all those consents and consent management piece onto a blockchain that's shared between the relevant parties. But even then, I would not expect that to be true, just given the governmental influence on the entire ecosystem. So I mean, I'll also take a second to maybe talk about my perspective on blockchains a little bit further. So I spent 3.5 years with Accenture, where I had the privilege of working on a variety of blockchain projects, but those were almost exclusively CBDC projects and traditional financial services projects. So I'm not particularly well versed with what's going on in Web 3.0, because we took the view that the main applications of blockchain would be in the traditionally regulated space. And I know that there's a lot of hype around, the crypto ecosystem, but I still believe that if you want blockchain to be a reality or to unlock any real value, it needs to exist in a regulated space on regulated assets. And that's going to take a very, very long time, because you need you need large-scale financial services enterprises to adopt this still emerging piece of technology. And more importantly, you need high-quality packaged solutions to be built on this technology in a way that can immediately deliver transformational value to large enterprises. And as of 6 months to a year ago, I still didn't see anything that I particularly liked in that space. The main use cases for blockchain that are out there at the highest level are to facilitate payments, to enable savings in risky assets or high-risk investments, and some form of identity management and data management. And the interesting thing about the India stack is that it delivers all of these services on centralized systems.
Yeah, there is something inherently, I think, even I would say incompatible, right? Because the blockchain always puts your data on 5,000 computers. And obviously that's a privacy problem. Yeah. You can't actually have Samahati on that, right? Because there's no consent. Like if you don't consent, you're just not part of the blockchain. I mean, this is like, it seems to me that this whole thing is kind of antithetical to even what the philosophy of Web3 is.
That's not an irrelevant problem, but it's not as material a concern as at least from my perspective, because you can encrypt your data, and the only person that's able to access it is you using your private key. Now, I mean, there's a whole conversation around that where you can use decryption techniques, and you can use data crawling and IP address mapping, and you can essentially extract data from the blockchain, and it's not really private at all. It's actually quite public, and that's a separate conversation. But that you can still solve that problem with the blockchain. The main problem with blockchains for me is the blockchain. What it solves is it creates coordination between decentralized parties without a central authority. Right? So if there's 5,000 people that need to agree on something, a blockchain will enable that agreement without a single entity enforcing that agreement. What's much more efficient from a cost perspective and an efficiency perspective is to have a trusted central entity that enforces that agreement. Right? I mean, even proof of work is this classic sort of blockchain example where it's so computation intensive, but even outside of proof of work, why do you have 5,000 servers when you can have 500 that's managed by one trusted entity? The problem becomes, okay, well, you need to actually trust that entity, and that is a problem. There's no getting around that.
So It's in
But
cases,
for the
so maybe
finan-
it's good in cases of low trust, right? I know my brother works in Rwanda, so I'm aware that this is a situation of low trust. There's a lot of corruption, there's history, there's traditions that actually don't necessarily value trust as much. And so in those kind of scenarios, it seems a blockchain solution might be the right one. But if you have the ability to have trusted parties, maybe it's superfluous. Would you say that?
Yeah, I would agree. And even if you don't have trusted parties, for the most part, at least from a human perspective, I feel like it's a lot easier and a lot cheaper to build a trusted party. There are still cases where it's not possible to build a trusted party, and I think my favorite blockchain use case, my two favorite blockchain use cases are cross-border payments, where you can't actually create a quote-unquote trusted party between two countries, because that would supersede the laws of both the countries or either country. And in that case, the creation of a central trusted authority is simply impossible. So cross-border payments is still a very nice blockchain use case, where it has a very clear fit between the situation at hand and its needs and what the technology is able to provide. But there's not a lot of use cases where it's not possible to create a trusted authority. A lot of this is also political. A lot of this is also political, right? I'll take the US as an example here, right? Because they are so polarized, the US is by no means the only country where this is true. A segment of the population may feel that there is no trusted authority, and another segment of the population may feel that there is a trusted authority. So it is on that authority to build the trust, whether that's even possible. So that being said, why build a more expensive and difficult to maintain system when you can just do the work to build the trust?
Yeah, if it's possible, right? So like you said, in terms of, for example, cross-country payments, and that is a really interesting one, because I spend, for example, a lot of time traveling between continents. And when I do that, I always have to have a whole completely different bank. Then I have to send things from one bank to another bank, and it's very costly, actually, indeed. So it would be interesting to have an integrated solution where it works locally in sort of, Samahati, and then but has an international component that works with blockchain. I think this is actually quite interesting to think about.
There's several initiatives around this as well. I don't think this has gone unnoticed. So from the crypto community, at least from last up to date on what was going on, Ripple is doing a lot of work on trying to build the cross-border blockchain use case, but they've been completely mired in SEC regulations, so that's probably not going to go anywhere. On the flip side, there's a lot of governments that are also putting work into trying to build cross-border payments use cases on the blockchain, and some of this is being led by Greece. So Infinite Line Rock between Thailand and Singapore. I think there's also another project between the HKMAs, the Hong Kong Monetary Authority, Thailand, Singapore, UAE. There's, I think the ECB is also considering, a pilot in that space. There have been a couple of pilots in the cross-border blockchain, in the cross-border payments use case using blockchain. I think Swift has also done some work in that space. So yeah, it's not gone unnoticed, but for it to be meaningful, I think established players need to get involved, because you're not trying to build a new system or trying to shift an existing system from what it is to something that it could be, and you can't do that without involving the existing players.
So in your system, when you advise people financially, this actually sort of plays into that, right? So it is often good to spread your risks across currencies. So in other words, invest in companies that are denominated in different currencies, simply because if you own assets in different currencies, you will, in the long run, there's a paradox about this. That simply having things in different currencies will drive its own profit.
Well, I mean, That's a perspective, and that's relevant in certain situations. So, for example, if you're in the US or in Europe, then you probably want a more diversified currency base of assets. But if you're in India, then you maybe don't want that as much, because ultimately it depends on what your liabilities are denominated in. Right? If you've got a bunch of dollar assets, but all your liabilities are denominated in rupees, and the currency rate goes against you, great, you got screwed.
Actually, that's right. This is part of what the crisis was about in the 90s, right? There were several Asian tiger crises that were based on precisely what you just explained.
That's correct.
But wanted to say something about, so can't you also denominate your liabilities perhaps in a mix of currencies? That could be an interesting solution to that, right?
Sure. But now all of a sudden, then you also have to manage your income in that currency basket. Because if you have an income liability mismatch, right? So if I have rupee income but dollar liabilities, again, now I'm holding currency risk. All of a sudden, the currency rate goes against me, and I'm in big trouble. I may not have done anything wrong. So ultimately, it's maybe easier and best to stick to one currency ecosystem, and find the right assets irrespective of what currency they're denominated in. And I think that varies from person to person. And it also depends on, what your goals are to some degree. But personally, my assets are primarily in rupees, because that's where my future is.
The empirical phenomenon that economists have written about, and that is really rather strange, and that is that, if you have an economy of 7% and you have another economy of 2.5% growth, right, you would expect flows from the one that has 2.5 growth to the one that has 7% growth, but simply because it's a higher return of investment, right? Why wouldn't all Americans invest in India rather than in America? And why would Indians ever invest in America? And it seems to be the case that there's a rather large flow from countries that have much higher growth, like India and China, to the United States. Is there something tied to what you just said? How would you explain this phenomenon? Why is this happening? Why do Indians invest in America, not the other way around?
So I think it's maybe worth my clarifying that point, because India does have a net positive FDI and has had a net positive FDI of the last 10, 12 years, last 20 years. So, I mean, to answer your question, yes, there is a lot of foreign direct investment coming into India. It is a reality. Where it gets tricky is actually currency risk, right? If I'm invested, if my liabilities are in dollars, all my assets are in rupees, and all of a sudden inflation spikes in India, which it has done in the past, the rupee is going to depreciate. So my asset may still have grown at 7%, but because of the rupee's depreciation, I may only get 1%. So it's not I don't think it's as simple as this is 7%, this is 2%. You've got to consider the inflation. You've got to consider, a little bit about the regulation. But ultimately, I feel like the most important thing to do is invest in assets of the right quality. If you invest in things that are going to generate quality yield for you, they're going to generate quality yield for you. Good companies will always be good companies. That's what makes them good companies.
Yeah, so that's true. And then there's diversification, right? So this is also this diversification thing, though, can apply to currencies as well, right? It can apply to good companies in different countries. You could say that this currency risk is worth something because higher risk, higher return. Generally, this is true even with currencies. You could get that. If you invest in something that's denominated in rupees, something that's denominated in euros, and some other things in Australian dollars and whatnot, right? It should be okay to take on individual currency risks because you're spreading the risk out over multiple currencies. So you're never selling the one you won't ever sell the asset where the currency currently happens to be lower than on average. And you just, when something goes up, when some currency shock happens in Australia and you happen to have something in Australian dollars and the thing just went up, it's a good time to sell. right? You can time these things as well.
Yeah, but why do so many complicated things? I don't get it. Like you could stick to your own currency ecosystem and you can generate great yield across any currency ecosystem. There's good companies to invest in the US that generate great yield. There's good companies to invest in Australia, in the EU, in India, China. It's why do this? Well, I'm like, why create so much more risk for yourself? What's the reward here? I'm not sure.
In my
I
case,
get
it's
it.
very simple. For example, if I have some income coming from the United States, this has happened, right? So, and I have some income coming from the UK, and it happens that the UK pound dives, goes down in value. I'll take the money from the US and spend that in the UK, and I actually do quite well, right? And then in times when the UK pound goes up, I will spend that money. So it's like, and I might go to the US and spend some pounds. So it's like you can in a way, you can take advantage of these fluctuations. There are, in addition to the fluctuations of the companies that you can also take advantage of. There is this additional fluctuation that you can, if you have multiple income streams and multiple currencies, you can take advantage of these fluctuations.
Maybe that's it. Maybe that's a really interesting and fantastic use case to build a solution on for people that have multiple multi-currency income streams and need to manage them in one place. I have not seen anything like that, and to be honest, you're the first person I know who's got such multi-currency income streams. But if there's a lot of people like that, then why not, right? It's definitely a good use case to build something.
Yeah, no, I'm just wondering. You could build. You can make it modular, right? And so if you combine Sahamati with the blockchain in clever ways, you could build a more international possibility for Indians to also take advantage of the possibilities and opportunities in other places. And the thing is, the way that I build my income is because I took note of this, right? I took note of these fluctuations, and I thought, well, maybe I should work a little bit in the US and have some US income, have some money sitting there, that in case the dollar goes up, I can take advantage of this additional. So it's just something I noticed, and therefore I acted on it.
Well, I wouldn't say you're wrong. I just think, at least for India, there's a lot of regulation around foreign currency remittances, and there's a lot of taxation around spending in foreign currencies, investing in foreign currencies. So there's sharp incentives to keep capital within the rupee ecosystem, and that's borne by a history of currency runs. So
I see. No, that works against it.
No matter what the currency fluctuations are, it's not going to work out.
Yes.
Just because that's how the regulation is set up.
I see that. Okay, that makes a lot of sense. And then maybe a smart policy, because it will keep India somewhat insulated from so that is actually sometimes a very smart policy, right? The Chinese have done this as well with the car industry, for example. They insulate it and grow it, and then once it's going.
And in fact, that insulation is sort of paying dividends right now, right? Like that's why the global economy is at an all-time low, but India's growth is still chugging along at 6.5%. So that's where the trade-off of this insulation comes. And just to bring it full circle, that's the Indian regulator's perspective of, we're not maybe going to offer all the opportunities, but we're going to protect against the worst outcomes. And so that's what I mean. That's the perspective.
And it works out for them. And now you actually have some evidence for it with the crisis that we all. Yeah. So I think this is very great. I think, again, Americans and Europeans should pay attention to this. I think we should all learn from each other. And I think, Sahamati is an incredible concept. I think that's what we've been struggling with. The fact that the internet has been essentially fenced off by large corporations. This then, in the financial industry, at least in India, is maybe less the case. Is that also less the case for other areas of the internet? Is the internet less fenced off in India, or is it similar to here where everyone's on Google and Amazon and Facebook?
I think it's pretty similar. I think India is pretty integrated to the overall internet ecosystem. I think the largest user base for most digital platforms is now India. The largest portion of YouTube users are in India, largest portion of WhatsApp users are in India, same with Snapchat, Instagram, that even OpenAI, even though I haven't seen their figures, gaming platforms, streaming platforms, I think the internet is becoming more and more Indian by sheer volume.
So do you think that they will, Sahamati, that also seems to me, that concept, right? That concept seems to me applicable for other things, for other types of apps. Perhaps a rival of YouTube, for example, built on Sahamati, where you can, where your data is still yours in a way.
So just to give you a sneak peek, I think they're testing Sahamati with financial data, but they're planning on adding other data types into that ecosystem over maybe a decade's time period. The next thing that's probably going to come on live once they figure out how to make financial data work at scale is health data, and then they can keep going with that. At least that's Mr. Neal Rosenfeld's view, is that this architecture works scalably across all data types for all use cases, and one by one they layer things on top. And it doesn't even necessarily need to be a YouTube built on Sahamati. It's just YouTube integrates with Sahamati now. Something very simple.
Yeah, that would change YouTube's business model and how they would have to work with it. They would have to make some adjustments. I think that's a very interesting approach. I'm really glad to have learned about it. And I really wonder how it compares to Solid. Maybe at some other point when we learn a bit more about these systems, we can have another conversation about how Solid and Sahamati compare, whether they're not rather similar.
Absolutely.
I think that's a really interesting thing. The NHS here, for example, in the UK, is now doing a project around Solid. They're trying to make it, give people essentially something like a data wallet. There is also this tension, though, between serving the public using public data, right? So, for example, if you have my data, and if the government has my data for health, for example, for health reasons, and has everybody else's data, they can then much easier predict something like COVID-19, for example, right? Or where the outbreaks may be and so on. So there's this tension about privacy and public interest also. Yeah, is that also true in the financial industry? There might be something to this as well, right? So we need to know how many people are, for example, below the poverty line, or how many people are struggling in various ways, to learn how these metrics are changing over time. Are we hitting certain targets and so on? We need to know some people's data in that way. Do you see this? Is there this tension? Can it be done in such a way where for certain public interest questions, the data can be made available with Sahamati?
Yeah, I think that Indian regulators and Indian government has taken a view that public interest will always trump privacy concerns, and that's not unique to Sahamati. That's just, again, how the government operates, and to that extent, you see them always err on the side of public interest, and on more than one occasion, that does step over into abuse of power, which is the big risk. But that's just the perspective they've taken. That's how they operate.
The problem with public interest is that you can redefine it and say, well, it's in the public interest that we're aware of, such and such group, and we should discriminate against them or whatever. Well, yes, let's cap it here then. And could you just leave our audience with what would you like them to take away with? And could you also say how they might stay in touch with you, how they might learn more about your work?
Yeah, so I think the one thing that I want the audience to take away from this conversation is that the future of fintech is in India. We're building some incredible things over here. Please do keep your eyes and ears peeled for what's happening in India, because I think that's the future of financial and technology innovation. And for anyone that wants to stay in touch, I do a podcast on YouTube called The Indian Market Story, where underneath the channel Paisa Smart, which is the company's name, I'm on Twitter as well, and hopefully there'll be links in the description for the podcast and my Twitter handle. And please feel free to reach out. I love talking about this stuff. I love hearing different perspectives, and I'm hoping to maybe share one interesting piece of news a day, make people's lives richer.
This show is published every Wednesday on the West Coast at 2 a.m., on the East Coast at 5 a.m., and in London, UK at 10 a.m. Please let us know what you like about the show, what you don't like so much, and please let us know if you have any ideas of things that we could cover that you would enjoy. Next week, I will be meeting with Neville Nui, and we will be speaking about the history, present, and future of data science and computing more generally.
So even, before the 80s, of course, there were people at MIT and so on who were doing research into AI, and mostly in sort of symbolic processing. I think, Marvin Minsky and others were experimenting, but it was largely symbolic processing using, programming languages such as Lisp and so on. And then really, I think, I know we're going to get onto sort of ChatGPT and those type of things later, but one of the sort of milestones came a few years later, I think, when neural networks really sort of came onto the scene.